Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 8th of October, 2021. Hope you had a good week in the markets. It was kind of mixed here. S&P and NASDAQ were up slightly. Russell 2000 continues to waste people's time in its big range, and the biotechs got hit a little bit harder. But that energy really had a good week. So let's take a look at the charts and make some sense of the action. This line right here, this vertical line, is where we were 50 days ago. I always leave that on there in case you haven't noticed it. It's there to tell me what to anticipate the direction of the 50-day moving average. As we've noted last week, we saw that the 20-day moving average crossed below the 50-day moving average, and that hasn't happened until, or the last time it happened rather, was way back in October of 2020. Now, that doesn't mean that we're making a top by any means. It means that we have mixed messages on various time frames, and the market has had a nice correction all the way down to the volume weighted average price from the last touch of the year-to-date volume weighted average price. So we hand off the volume weighted average price there, and that's what became important this week. We got the bounce we were looking for, as we spoke about on Wednesday, and it came right up to where it was supposed to in this range here. There's several things up here that make this a level of interest. One, as we just mentioned, we've got the declining 50-day moving average. This blue thin line is the declining 20-day moving average, and we did close below that today. We also closed below the volume weighted average price off the peak. That's that red line, and you can see that held as supply here today. We're also below the volume weighted average price from this mid-August low and the mid-July low. So the more volume weighted average price levels we're seeing that used to hold as support now becoming resistance, the more difficult it makes it for the market to be able to clear this hurdle and move back higher. I'm considering this market as just a bounce within this downtrend until we can get back above and hold above probably 441 or 442. If it was to get above there next week, pull back, test it, then we could be headed for new all-time highs. It's not out of the realm of possibility by any measure, but it's going to occur on shorter term time frames. This is where we're going to see the evidence. As we've noted, the gap down on September 20th had been initially a little bit of support turned into resistance, and then the more repeated tests of that resistance, we saw that on Thursday it did in fact gap higher and continue higher throughout that day, for most of the day rather, but now that becomes an important level. So the average participant who bought from that gap in the last 2 days, they paid an average of $439, and here we are down only about a dollar from there, $1.50. So it's not a horrible thing here, but it's just something to be aware of. Again, we've got this volume weighted average price off of the all-time high, and that held as resistance so far today. On the positive side, we also have a rising 5-day moving average. That's important for me. So what we want to see is that this, if we continue to see some pullback, we want to see this general area 435, 436 hold as support. That's our potential support. We won't know until it comes down and bounces from there if in fact it was support, or is it just going to knife right through there? So what we want to do is see that if it pulls back, we'll keep an eye on the volume weighted average price from this gap. If it then gets back above it, that's a nice sign that we're seeing buyers come back into the market here, and that could occur next week. This is, again, the volume weighted average price from this September 20th low and the 5-day moving average. That's what really adds a lot of significance to that level. Plus, we had that horizontal resistance. Back below, closing below 435 for more than a day or two, it could be another leg lower for this market. So we're at a critical juncture here. We can rebuild next week. Hopefully that's the case, that we can rebuild. This volume weighted average price comes back, straightens out, and then we see it break higher from here. If that were the case, you could set a stop underneath this level. That's only one scenario. Again, the other scenario is we just continue to pull back. It's going to be an important week next week to see if that happens, because again, what we're getting rid of in terms of where the data was 50 days ago. If we rally here, then it can be back above and drag that 50-day moving average higher. So clearly a critical juncture. The NASDAQ not clearly as strong as the S&P 500 on a relative basis. And if you just look at prior support in here, this prior support, this bigger band of support, seems to be acting as resistance. We also are, of course, below the volume weighted average price off of the peak. That's declining. The 20-day moving average is declining. The 20-day moving average is below the declining 50-day moving average. That didn't end the market over here for sure. The last closed below the 20, below the 50. I only point it out because it typically leads to at least some sideways consolidation. But in this case, with the Nasdaq, we also have the volume weighted average price from this low and this low overhead, and we can even go back to this volume weighted average price, which we held. So this is going to be an important area. 356 really is what we want to see hold. The volume weighted average price from the September 20th gap we're kind of fighting with, and I think that realistically you get a lot more defensive below 358. If it gets below there and closes below there, there could be bigger problems for the Nasdaq. The Russell 2000, as mentioned last week, and for the entire year, it's just been a big waste of time. We've got a range that's tightening in here, and maybe it's going to break higher, or perhaps it's just going to or break lower, or it's just going to continue in this bigger range. To me, there's nothing really worth analyzing on the intraday time frames. So again, it's just a waste of time in my opinion. The semiconductors got hit pretty hard. They came all the way down to the volume weighted average price from the March low and came pretty close to the year-to-date volume weighted average price. That's that blue line, and we have the the 200-day moving average there as well. Now in this case, we are below the volume weighted average price from the peak and this peak, and we are over to a 30-minute. Actually, let's look at the 15-minute time frame. You can see the relative weakness here. That September 20th gap lower. Once we broke below it, it held as resistance on Thursday, and today the semis were much weaker than the broader market. Again, looking at just the relative performance since this gap lower, you can see that the S&P 500 is holding above it. The Nasdaq right around it. Semiconductors below it, and it continues to decline. So a little bit more maybe sideways action would be the best case scenario for these semiconductors. I think you've got this bigger band of prior support, which might limit the downside from here, but be prepared for anything. And again, we're right on the 5-day moving average. That 5-day moving average will decline if we see further price deterioration on Monday. Biotechs have shown zero reason to be a buyer. We were looking at it as, hey, maybe there's going to be support at the 50-day moving average. Maybe there's going to be support at this volume weighted average price. And it did hold there for 2 or 3 days. But as we noted, it was not a reason to buy because we still had this 5-day moving average declining in that area. So these 3 days here were at the end of September. That's, of course, these 3 days right here when it looked like they were trying to find support there. We don't buy. It's a level of interest. That level of interest tells us look to a shorter term time frame to look for evidence the buyers are gaining control. And we had no such evidence. Always just keep this in mind. We had lower highs. We had a declining 5-day moving average. There was no reason to be a buyer. You don't buy the dip. Buy strength after the dip. We're on this trend line. Is that going to hold? I doubt it. I don't know. The path of least resistance continues lower. We have a declining 5-day moving average. How could things change? Maybe, they do something like this. Maybe on Monday we undercut that low, really shake some stops out. The 5-day moving average swings around and it breaks above this volume weighted average price from that gap lower. And then what we would expect, maybe a rally up to here, but it's a rally within a declining market. So if you were looking for such a trade, keep in mind it is just a trade scenario. The strongest group continues to be the financials. They, in fact, closed at a new all-time high here, which is pretty crazy considering the rest of the market and its weakness. So financials are, they gapped higher on Thursday. If you recall on Wednesday's video, I was saying, maybe we can do something like this and a normal break past resistance. Instead, those gaps, you just can't chase them, or at least I don't. But you've got to be impressed with the strength there and give them the benefit of the doubt. And same is true with energy. Energy is breaking out. Be very careful about chasing a breakout like this. Why? Because look where we've just come from. We came from 46 all the way to 56 in the last 3 weeks. And now buying a breakout, people always complain, hey, the breakout didn't work. Hey, I'm buying a breakout. Well, of course it's not going to work. And I'm not saying it won't, but it seems highly unlikely to me that there's going to be significant buyers here. Instead, the people who bought when it made sense, as it broke above resistance, as it broke above the volume weighted average price from this peak right over here. That volume weighted average price had flattened out, prices got above it, and it just rallied close to 20% here. Actually, not true, maybe about 15%, whatever that might be, 12%. Anyways, we have about a 12% rally here. Now, buying a breakout, you're late. It doesn't mean it can't work, but you've got to know where your risk is. We continue to ride that rising 5-day moving average so the buyers remain in control. If you saw my Twitter this last week, I spoke about ARC and the underperformance in here, the fact that we're below the volume weighted average price since the inception of this fund. And in fact, if we take a look, well, I'm not going to do that, but there's actually not only is the ARC fund down 11-12% year to date, but they're also getting net redemptions. It's not a good scenario for this group, for this strong momentum, leader. And we can see that, I was looking for maybe a rally up towards this level that could become resistance. If you look at the 15-minute time frame, we're back to the September 20th gap. Very similar look intraday to the semiconductors, actually, if you look at how they rallied up to that volume weighted average price. Anyways, this is not good for momentum names. Keep an eye on that if that can't recover. Let's take a look at Bitcoin now. The last couple updates on Twitter, actually, over here I was saying it didn't look really like it wanted to rally. And then it did start again going. I pointed that out on Twitter right here at about 43,000. Unfortunately, I bought some there. I also sold some this week right up in here at about 52,000. And then, of course, all the little trolls said, ha ha, ha, see what happened? Well, the fact is, my Bitcoin account is at an all-time high, and it continues to, and I'm looking to buy back, maybe down towards that 52,000 level. But you've got to be very impressed with the strength of Bitcoin here. So anyways, hope you have a good weekend. Thanks for tuning in.